Good morning, good afternoon, good evening, wherever on the globe you're joining us from. Welcome to this panel on creating new value models. I'm Matthew Saal with the IFC's Financial Institutions Group Digital Finance and Inclusion team, and we're privileged to be joined today by Kannan Srinivasan, the head of digital product management for East West Bank, Jayson Humphrey, Senior Director Network Monetization for Tradeshift, and Daniel Eckert, Senior Advisor and Operating Partner of Corsair Capital. To get things started and give everybody a chance to talk a little bit about their perspectives, I'd like to ask the panel how they define embedded finance. What does it really mean to you and in the markets that you're working in? Daniel, can you start us off?
Sure. Great to be with everybody today. Just by brief introduction before I give you my sense of how I would define that. As a senior advisor to the venture community as well as the private equity community with Commerce Ventures and Corsair Capital, we obviously are focusing on a lot of the innovative areas of embedded finance. And my prior background was actually as an operator and was a senior executive at Walmart, where I led Walmart services and Walmart's financial services. And for the last 10 plus years was constantly looking at ways to improve the customer experience and embed financial services in that experience to improve their everyday shopping and their everyday lives. So the vantage point that I tend to come from is both from a business to business and a business to consumer standpoint. And how I've viewed embedded finance is really from a customer's lens in terms of the journey they're trying to map to get something done. It really is about that experience. And when you look at what a customer is trying to get accomplished, whether it's in a shopping equation or in any other journey they're trying to map where financial services would come to play, historically, those financial services would be accessed completely outside of that experience and would create not only friction, but also some steps along the way that could otherwise be much more seamlessly integrated in the task or workflow they're trying to do. And so for me, my definition of embedded finance is how you're actually leveraging these modern technologies, application programming interfaces that have unbundled the stack of financial services, and then view the customer journey through the lens at which they're trying to accomplish something, and then inserting or embedding those applications to seamlessly fit within that workflow to make the task, the chore, that you name it, much more easier and convenient to execute.
Great, thanks. Kannan, how about you?
Thanks, Matthew. Daniel, he said it very succinctly and also very clearly. So from my perspective, I come from a banking background. Originally, I started as a tech person building products, and over a period, I have moved on to financial technology, building products, running programs, delivering new products to the market, and managing a whole host of things. So from my perspective, it's about the convenience for the person who is making the transaction, right? So within their contextual workflow, at the right time, providing the right help at the right time, right? So for example, let's say at the POS level, we are enabling credit, which is the BPNL segment, which is picking up, which is going to be very hot right now. So at the right time, providing finance / help at the right time, at the right place. That would be embedded finance for me.
So right time, right place. And Jayson, I hope we're all in the right time in the right place to hear what you think about this.
Thanks, Matthew. Great explanation from Daniel and Kannan. I approached this from a bit of a different spot. My background is mostly in e-commerce, 15 years in e-commerce, primarily in marketplaces space, global marketplaces, domestic marketplaces. The ones that you would typically recognize, Amazon, Walmart, eBay, Alibaba. And from the supplier and buyer perspective, more recently, I've been at Tradeshift, which is a fintech company and a leader in the digital invoices space and a visionary in payments and marketplaces. And so my perspective is, how can we layer in financing services on top of our procurement and invoicing network? And it's, my background is in e-commerce, and much of that is in consumer, business to consumer. And as a millennial, my perspective is I want everything to be convenient, right? To overuse the term the Amazon effect, when we think of embedded finance, it's all about the word embedded, and we are consumers in our everyday life, and then in business we go into needing to finance something or purchase something or request for funds in order to accomplish something, and if it's not convenient, it's difficult, it's frustrating, and it takes time, and the cost is increased. So embedded finance is all about what Daniel and Kannan have said. It's user experience. It's all about convenience, and how can banks and fintechs and different platforms make this user experience better, and feel on the B2B side more and more what we as consumers are feeling in our kind of everyday consumer life.
That's interesting. This notion that we're extending the consumer experience into the business operator as consumer with the same expectations, because even if this person is a treasurer of a major firm, they are in their other life a consumer who's grown used to things being comfortable and fitting into that workflow. So a lot of what I've heard just now is on the side of the customer: convenience, efficiency. What is happening and motivating on the platform side? Is it just about let's make the customer as happy as possible, which is a great incentive in and of itself, or are there other motivations in terms of customer stickiness or critical functions that might not otherwise be available? Are there gaps that providers are trying to fill by embedding finance?
Yeah, just to speak to this, I think from the platform side, and operating in a network where multiple companies are collaborating and going back to user experience, the challenge in B2B is how to make these connections work seamlessly. And I would say it's still a challenge on every front. There are significant contractual commitments and compliance commitments, and I think there's still an open question of how can embedded finance work in the B2B space and check all the necessary boxes in regards to compliance and all the different complexities. But we certainly see opportunities in the ecosystem to, when you add this value to the user, right, there's other ways to monetize that value chain in ways that maybe the user may not be affected. And so inside of the platforms, inside of the ecosystems, I think the expectations of users from that consumer perspective we talked about is driving and motivating these changes. But there's also a lot of economic drivers that can be taken advantage of in the process.
Kannan, you're helping a bank embed finance into other applications. What are the motivations that is driving those applications? Are they trying to take over banks' business and provide revenue or earn revenue from the financial services as such, or is it an adjunct to facilitate growth of their core product?
I look at it from a couple of different perspectives, right? From a company standpoint, to offer an embedded finance product, right? There are two factors that I think play a very critical role. One is stickiness, right? So when I say stickiness, convenience for the customer, so they can build on the customer experience as well as their relationship, expand their relationship. That is one. Second, a new revenue lever, right? So if you look at it from the market perspective, what Shopify did or what Amazon did, embedding financial products into their for their merchants as well as their consumers. So they have done a lot. So they're approaching it from those two perspectives, right? Of course, from a bank standpoint, I cannot talk for all the banks, right? My personal view is that, yes, there is going to be some amount of existing business that's going to be taken away. But in a large scheme of things, banks and the new fintech providers are close partners. They cannot live without each other, right? So that's my perspective. So banks, they do offer a lot of these services, right? Fintech partners, they provide the technological or highly evolved services that can be integrated, as Daniel mentioned earlier, through open APIs or other forms of cooperation. We can offer a lot of newer products, but from a bank standpoint, it's expanding the reach, right? It's expanding their customer base. Any bank, there are a lot of banks. Reaching specific targeted customer is always difficult because for a variety of reasons, right? So if they can expand their reach with fintechs, partnering with fintechs or other institutions, that's beneficial for everyone. It's a win-win-win for all the parties in the ecosystem.
Yeah, I would just add to that too, from my vantage point as a former chief product officer at Green Dot, that is a Fed member bank, is this symbiotic relationship actually can be quite a compelling partnership to solve these embedded financial services problems for end users. And as a bank, the institution is very often focused around risk management, compliance, regulatory affairs, as opposed to crawling deeply inside specific customer problems, whether that customer is a business or a customer is an end user. And by partnering with folks who actually can focus on those specific problems, and then the bank can help abstract the things that are required by regulators, risk managers, et cetera, so that they can be consumed easily. There's a very symbiotic relationship there that I think could help banks and will, for the forward-leaning banks, help them progress, advance, and grow in very different ways than they probably historically would have, which should expand the pie. I don't think it would necessarily contract the pie. So I really do see it's a partnership, just as you said.
Definitely.
Thanks. I think there's an important... go ahead, Kannan.
Oh, no, I was just, reiterating what Daniel said. Yes, it's a very real partner, very good partnership. Will work for everyone, and it's a win-win-win thing. And one thing, industry, when I say industry, the fintech providers or others, they underestimate this a lot, which is the compliance-related needs, right? So they from when I talk to people and they talk to me about, hey, can we do this? Can you partner with me? They really have no understanding of the complexities underlying towards the compliance. It comes to payment or onboarding a new client or the regulatory needs, right? Just to provide a context, last year in UK, the total number of banks or others, the money spent on AML or compliance related activities was close to 30 billion pounds, right? In comparison with UK's annual military budget, which is 52 billion pounds, right? You have to look at the complexities and the costs involved. People don't realize it. So that's why I'm thinking, it will be a great partnership. So banks have been, over the last several, decades, built on this expertise, how to manage risk, how to be compliant with all the regulations, right? So that's very, very important point. And also, there are other things that banks have been doing that fintechs are just getting into in terms of credit assessment and stuff. I think we can, talk about it later, but it will be a win-win for everyone.
Yeah, just to go off of that, I just 100% agree. As a fintech, right, it's essential that we have the right partnerships with the right banking partners, right? You have hundreds of years of this compliance and regulatory understanding, and fintechs are popping up, everywhere, right? And they're overnight successes in some cases, but the point is they're still quite new on the scene, and there's a tremendous amount that we can learn from the banking infrastructure. And I think the most success really comes when you have the right partnership and complementary arrangements between fintechs and the banks. Agreed.
So there's an opportunity for banks to stay relevant as this world shifts, which is nice to hear. In the sense, banks are the original platform business model, taking deposits on the one side and loans on the other, and merging them through a single platform and providing the tools around each side. So kind of interesting to hear that still has some relevance as things continue to evolve. A lot of embedded finance is being driven by platforms, e-commerce platforms, logistics platforms, invoicing platforms. And we're lucky here to have a platform represented, a bank, and also a representative or someone with experience of the in real life kind of industrial sector. To what extent is digitization of the broader range of business activities, the order to inventory, to invoice to sales cycle, the workflows that you talked about, to what extent is that going to drive the embedding of additional finance, and what are the new opportunities that you see coming out of that?
I'll jump in
Jayson,
on this. Yeah, I'll jump in on this for real quick. I think there's a number of opportunities that are arising. The complexities in a B2B transaction are very high and time consuming, and the platforms that are winning now and will continue to win are those who can simplify that entire workflow, which is easier said than done. And then in these different points along the way, right, can embed financial opportunities or needs or provide things. And to the extent that the value that's being added is already integrated into the platform, so like an in-app experience, then that makes the user even happier and it's faster. Now, there's a tremendous amount of complexities. It depends on the level of the user, and their permissions and how much access they have in different platforms. There's a lot of different complexities there, but the platforms that are winning are those who can streamline or reduce the friction, and where there are major decision-making points can then offer embedded finance. And so this is something that we're particularly very excited about in terms of helping suppliers get paid faster and help them continue with their own working capital as they are doing business. And let's say a payment is either delayed or a buyer is extending their payment terms because, well, we're living in a pandemic world right now. This is a huge challenge, right? And so to offer the ability for a supplier to get paid now, right there inside of their workflows is tremendous value. And in some cases, life-saving for the company. It's oxygen to their business.
Yeah, Daniel,
just to build on that,
Jayson.
Jayson.
On the industry side.
I'm sorry. Yeah, I was going to build on Jayson and talk a little bit about the just building on how platform selection also is very, very important. So what fintechs do, or if the embedders, what the embedders do very, very well is actually study the primary workflow or the primary workstation that an end user is activating or engaged in, and then recognizing where the simplification inserts can happen through embedded finance. And it's not often immediately clear what is the primary workflow without deep observational behavior, understanding that customer and saying, oh, if this is your primary mode of operation in your everyday tasks, that's where I need to insert my embedded financial application, and not try to steer you to a different experience or an ancillary experience where the embed happens, because then you actually may be creating more friction rather than less. I'll share with you a specific example of some work that I did when I was at Walmart on behalf of our associates. Walmart's largest employer on the planet still, has about 1.4 million associates in the United States. And we were studying intently what was causing associates to attrit after the first 90 days of employment at Walmart. And what we found is a lot of attrition was happening due to financial duress, just financial stability, financial duress, and the speed at which they actually could receive their very first paycheck, which, another very antiquated problem is in payroll is that, most of the places in the United States still pay every other week, sometimes twice a month. The state of Rhode Island is the only one that does once a week. And when you actually start on an off-cycle payroll cycle, you may wait up to 3 weeks to get that first paycheck. And for somebody who's low or moderate income, that could actually mean the difference between being able to make it to work or not. And so we started to study this and saying, well, okay, maybe we can provide access to earned but yet to be paid wages through a unique embedded financial application. But where would we put that? And what we started to really understand is the primary modality that our associates were engaged with was within the time and attendance and scheduling system. So they knew when their shifts were, how they were actually being scheduled, and how many hours that they either had ahead of them so they could budget because hours means money, and how many hours that they worked. So the perfect embedded place to activate something like earned wage access at scale was leveraging that workflow where we saw our associates most engaged. And I think that was one of the success stories in our partnership with Even and Pay Active to develop the first scaled implementation of earned wage access in the United States, which still stands to be hundreds and hundreds of thousands of associates daily using that because of being very thoughtful on where to embed and on which platform. It's a really important thing.
Great example of what was said before of being in the right place and the right time with the right tool. Kannan, anything that you've seen from the work that you've done with various clients and applications?
Sure. So I think from a financial institution's perspective, right? So our person whomever providing the background, right? There are only a couple of things that they need, right? So it depends on the company that wants to provide the embedded finance app. So it's about the person, the asset, right? So in this scenario, Daniel mentioned, it's the accrued pay, right? So as long as somebody can confirm, right? So then obviously these kind of solutions can easily happen, right? I think I would definitely implore anyone who's participating in this conversation or viewing it at a later time to use these opportunities. Every bank is open to such things as long as the details are available, right? So that's the key part. So in earlier example during the trade, when trade is happening over multiple steps, again the same thing, information, right? So about the company, what the product is, when was the invoice sent, when would it be paid. So all these different types of information is needed, right? That's the primary objective, right? The bank can provide the support based on some kind of evidence or collateral or information. So as long as that pipelines can be built, it's actually pretty straightforward to build these kinds of solutions. But of course, we need to find the right partner who can support you through the technology challenges as well as the procedural issues too.
Sure. You've just touched on that question of data and information and how to link to not only the processes, but to the information that's flowing through those processes that enables you to know this person has some wages earned or this company has an invoice that's coming due from a creditworthy counterpart. Are there some areas where you see actually that embedded finance not only reduces costs and increases convenience, but can actually manage risk better than more traditional third-party finance? Is this just a superior business model for lending, for example?
I would say yes, right? Just from a perspective. Otherwise, most of the time, it's a push, right? So when I say push from client to the financial institution, not only banks, there are a lot of other financial institutions provide this service too, right? So they always, the information is pushed to the financial institution. They review the information, they make sure it is right, and then they unlock the funds, right? So that's the the traditional model, right? In the newer model where things are already available to you, right? So now you can run a lot of different types of analytics in terms of how things are happening, right? And particularly in e-commerce, right? So now the ultra fashion brands, they are just changing new lines like every 3 months, right? So they keeps moving. So to move, to stay in sync with what the industry is doing, the data flow or the information about what is being done is very, very important. In fact, that will define our any, not just bank or any financial institution will have to depend on such, large amount of data. Plus, at the right time, again, it has to be provided during various stages when it's happening, and once it is the data information or the interfaces are synced with the provider as well as the platform, then the solutions can easily flow. It can happen pretty quickly.
Mm-hmm.
I would say from my perspective, I don't want to say it will be better per se, but I do think that it can be different moving forward. And I think the goal is, while maintaining trust trust is a essential element to this, right? Well, so while maintaining trust, how to also increase the speed. Users want to make decisions. They want to make them now. They want to go, continue to move forward. And I think platforms collect a tremendous amount of information on the companies, and they know, for example, in e-commerce, right, what the sales are on a daily, hourly, monthly basis. And so if a platform has that information and they have the history of the company and their credit worthiness from, the amount of sales or maybe their profitability, then their ability to make a decision as to whether or not to extend financing, for example, is very fast, right? So I think it's different. Maybe some users would think it would be better than other ways of doing it, but I think these platforms and leveraging that data, can help make things faster.
Yeah,
certainly
and I would just build on that.
Platforms have a lot more visibility into certain aspects of the business, and in a period such as we're living through, where there's been this incredible structural break, credit history that the bureau has may not be valid to what's going on in a business today. You probably know more than any credit bureau because you're seeing the invoicing flows.
Right.
Yeah, and I would just build on that. I would even go out on a limb and say it's probably going to create better experiences and better outcomes for more individuals if handled correctly. And it is different because while bureaus collect data, they're very, very, they're often blind to a lot of these longitudinal behaviors that can be collected over time within these platforms that can provide a much more robust and holistic understanding, particularly when it comes to credit risks or risk in general, risk of fraud, risk of non-payment, risk of delay. The platforms for which the embedded financial applications are coming into, if structured right and privacy and on trust and all the things that Jayson, you mentioned, are handled correctly, you can actually start creating even better, more convenient experiences for the customers you have rich understanding on, while also provoking obstacles or maybe some additional speed bumps for folks that you have very little history on, but still could get to a confirmatory response for if provided, enough information, enough detail. And I think some of the best platforms that I've seen are really thinking very deeply about those data sets and how they actually can reduce them into something that is digestible by the financial underwriter, by the bank, in a way that improves their understanding of risk and makes the whole ecosystem better off in the long run.
Totally. Yeah.
Well, I'm definitely on board.
I've experienced a scenario where
IFC just recently announced a partnership with an FMCG and a payments company and a tech company, and in order to drive that kind of data analytics for small retailers in Indonesia to increase their access to finance. So we definitely are thinking in similar terms of how do you get that data, reduce it to the relevant pieces, and figure out how that can be used to underwrite a new set of customers. Sorry, Kannan, go ahead.
Sure. Yeah. So I was just getting deeper into that, right? Because the credit bureaus and other information, right? They don't capture the sentiment, right? It's whatever has happened built on history, right? And of course, that information is available to everyone, right? Plus, what is happening now is also a very important factor, right? Which I think, the credit card or companies, they totally missed that sentiment. They had the, pay in installment products forever, right? But the new BPNL or buy now, pay later providers, they completely took over the market, right? I think it's towards the customer sentiment that, hey, I want to pay something in shorter installments, but I don't want my credit to get hit, right? So I think that specific sentiment hasn't been captured by any of these companies, which I think, resulted in all other companies taking over, right? And Squire's massive acquisition of Afterpay, right? So who would have thought, right? It's changing the game, right? And the funnily, right, I used to say Squire bought it Afterpay. It's all stock. We'll pay you later, right? We are buying you now. We'll pay you later. All stock deal. So the BNPL company bought in that fashion. Anyway, I think the bottom line there is data, right? That's the key, all right? The data about merchants, how they are doing, right? Which is going to strengthen Square a lot more. So yeah, the data is going to be the key driving underwriting decisions and new products in the new world. That there is no challenging to that fact, right? That's what it is.
That acquisition story also brings to mind what was probably the one of the earliest platform embedded finance plays, which was eBay buying PayPal back in the day in order to embed merchant acquiring as part of its sales platform. Now, that was something that had to be done at the time. That was a partner or buy versus build. How much of that still needs to be done at this point? Is there enough building blocks out there that no one needs to build it themselves anymore? There's always an availability to partner, or acquire, or is there still some things that you're going to have to build yourselves?
I can tee off. I would say the buy versus partner decision is going to run along the lines of where to use an economic phrase, the comparative economies actually play out for that particular decision maker. So, if for example, my former employer at Walmart was incredibly focused on providing customized customer experiences, whether it's for their associates or for their customers, and really wanted to do the build process of how that journey would be put together, and at precisely what point an embedded financial application would surface, could resurface, and then ultimately convert. Behind the scenes, however, very little interest in trying to figure out how to build, your own hooks into a regulated institution. It's much better to consume those if they've already been built, but really focus on what we did best, which was laser focus on the customer and the journey we were trying to make happen for them, both digitally and physically. And so while I don't know if it's as clean as saying, do you build or do you partner? You probably do some mix of both, and you really lever where your strengths most lie to create the experience that you're hoping to create for your customers, whether they're partners or end users.
Build the journey, buy the car.
Yeah.
That was a great response. Couldn't add to that.
I want to return to the something that's been raised a couple of times, but it's a really big issue around the compliance aspects, where many of these embedded finance applications are taking or putting a regulated activity into the context of something that's not regulated or not regulated, certainly as a financial activity. It's also kind of sometimes bifurcating who owns the customer. And I'd be interested in some of the experience that you've had and some of what you see playing forward in terms of how you've all raised the issue that compliance is important, but how is that playing out? Is the platform or the embedder having to come up to speed on the compliance? Is that sort of outsourced down to the bank? Who owns the customer, and how does that then work? Kannan,
who wants to go on this?
I'll call you out on this since you're right in the middle of it at the bank level, but I'd really be interested to hear Jayson also in terms of how the platform looks at these issues.
Sure. See, I guess this is one of the hot button issues, right? Particularly who owns the customer, right? So when, not from the perspective of my bank, from a general banking industry standpoint, this is a challenge, right? Because a fintech, let's say Chime for other members, right? So who are having that layer, right? And they work with the clients, they get the information back to bank, and bank does all the background processes, right? So now when there's an issue, or how do we deal with it, right? That process can happen. That's we can make it work. That's not a problem. But the larger question is, who owns this customer, right? So is it somebody who started the journey, right? Or is it someone who's doing, making sure everything is in order, providing all the background information, right? So it's not about owning per se. Maybe it's a collective ownership. Right? I don't know. I mean, I don't have an answer, but I can tell you this is something that's being debated across different banks or even fintechs. Some of the other discussion or forums that I've been part of, this specific question, right? And who's responsible for making sure the data stays safe, right? Particularly now we have created a lot of these, over a period of time, different potential partners are in the game. For Chime, there's another bank behind the scenes, right? And now we have the data aggregators who are getting this data and bringing in additional features for Chime. So now, who owns this customer data? If something happens, right? Who's responsible? And everything will be, really looking good. And as long as the customer gets what they want, it's all good. And then finally, there's something, shouldn't happen, but somewhere something happens and the data is exposed, and then the regulatory fines will start coming in. Right now, who's responsible? Right.
And
so
who's
it's all.
responsible? Yeah, and who's responsible for compliance when somebody else originated the customer? Jayson, what's happening in your space?
Yeah, so I'm not going to attempt to speak to compliance. It's not my expertise, so I'm not going to try to answer that one correctly. But I'll give you our perspective, or my perspective, a couple things. So in regards to data, I would say we all have a responsibility. And I think it's something that we can all do a better job of improving the ownership and the protection of the data. On the compliance side, Kannan, your question of, okay, something happens, who's held responsible? That's something I can't get into the right answers there, but I think we all have a shared collective responsibility to protect that data and do the right things with that data, which comes from the original design and the architecture of the platforms and all the different things, right? So that's one side. I think on the other side, as the landscape changes, who owns the customer? The customer owns the customer. The customer makes the decisions where they want to go, where they want to be. And I think it's on us as service providers, as technology providers, value added, all the things, right? It's on us to do the right things to win that customer, right? To participate in our environments and by adding value, right? But ultimately, the customer has options, right? And those who will win in the market are those who will protect the data, design it properly and allow the customer to go forth and do what they are attempting to do, right? In the best user experience and value added way possible. Long story, different answer that you would be looking for, but it's our perspective.
No, I think that's a great way to think about this, and something for all of us to remember, that ultimately the customer owns the customer. I want to be mindful that the session description promised some new business models, and we've heard a little bit about BNPL, and I think there's a big segment of customers who use that a lot and look at it and say, why did I ever have to pay the whole thing up front? What is the next use case or business model or product that's going to be common in the next 3 to 5 years? Maybe something we've seen yet, maybe we don't see it much yet, but that 3 years from now we're going to look at and say, why did I ever not do it this way? Anybody want to give it
something? I'll throw out there. I'll just throw something out there. And part of this is already happening, but because of embedded finance, so I think the buyer will pay when they want to pay, and I think the seller will get paid when they want to get paid moving forward. Instead of having, a lot of complexities where the buyer has to come up with cash on hand right now and pay right now. If they can't do that, then they would have the option embedded where they don't have to right now. And it's based on the purchase, or maybe it's based on the commodity or the whatever it is. They can make that choice to pay now or not pay now. Right. And they have that, they're empowered to do so. And similar on the seller side, and I'm particularly thinking about B2B, where payment terms can vary greatly. And oftentimes the seller are the ones who eat the cost, right? They're not being paid in a timely manner, and that substantially inhibits their supply chain and their ability to run, right? So what if a buyer can pay how they want to pay, when they want to pay, and the seller can get paid how and when on what terms they want to? And I think more and more today that's becoming possible.
Great. Kannan, what do you have for us? What's in your crystal ball?
So this is very interesting. So I've been looking at the market for quite a while. I've been following how interesting things are changing. So in the embedded finance, perhaps it started with low value, low transactional value items from, let's say, payments, and then getting into credit, potentially into investments and insurance, long-term insurance kind of things, right? So the journey will be going from a transactional basis to high trust needs. So it will happen. So from insurance standpoint, as you might have seen, Square Trade started, and then I think Allstate purchased them. Now Costco or other, I think Amazon too, they offer insurance on every product purchase that you are having, right? So they offer insurance. So I don't know how well it is working. I don't know that. Because when you buy the product, when you complete the purchase, right? Costco says, I'm no longer responsible. Amazon says no longer responsible, right? I don't know if you have bought this. So in my mind, yes, embedded finance, it happens. If it is not on a transactional basis, right? Am I going to get the same experience, right? That's going to determine how the model is going to evolve over a period of time for transactional items, right? But on the other hand, as Jayson mentioned, the platforms have enabled new business models, not just for the existing players, for the new players too, particularly, let's say, working capital management, right? I see because of the platform, there are a lot of institutional investors coming in and investing, buying off those invoices at a discount, right? Providing liquidity to the suppliers, right? Historically, banks were doing it, right? Or other financial institutions were doing it. Now, a large number of individual investors are also going in. So how it's going to evolve over a period of time, I don't know. But interestingly, the new models are emerging, right? So now at the right time, at the right place, right, within the right context, within that model, there are not a lot of new things coming up. Tesla is coming up with their own insurance product, right? And Metro Mile, they have come up with their insurance product. It's all leading towards, right, I will pay for the stuff that I use, right? I will, and then I want to get paid when I want to get paid, right? So what happened to the technology industry with SaaS model is also kind of leading into the financial ecosystem too. That's what I am thinking. When I look at the pattern, that's what I'm thinking.
So finance as a service, we're going to use as much insurance and peg it just to what we need. For as long as I drive the car, I'm insured. For as long as I use the product off of Amazon, I have the insurance just for that. And just adding each of these things on as a service, or the finance as a service, I'm a supplier, I need to get paid now. I'll draw it down, but next time I may have a week's extra capital. I'll wait. Great ideas.
I'll wait, yeah.
Daniel, which of these are you going to fund, and which one are you going to promote?
Both of them are right on trend in what we're hearing and seeing in some of them, the young entrepreneurs' brains right now. I'll switch over to the consumer side of the house, and some of the trends that we are seeing in this embedded financial services, revolution, evolution, however you like to describe it, and how ecosystems are forming around customer activities. And my sense is, as these ecosystems continue to attract large, deep pools of user base, user time, more and more of their everyday life is going to actually be embedded within that overall experience. You think of the Apples of the world, Facebooks of the world, privacy issues notwithstanding, Walmart, Amazon, places where there's very deep pools of customer activity naturally allows for these embedded financial applications to meet those customers where they are spending their greatest amount of time, their energy, and their efforts. And we're seeing activations start to come out at a much more rapid pace in this modern world than even 5 or 6 years ago because of how easy it is to actually activate and embed. And my sense is you're going to start to see the models that you've just described on the consumer front with insurance, warranty, money movement, money financing happen all within these ecosystems. And there's going to be, what's interesting about that is as this ecosystem's evolving, these ecosystems all are vying for that attention, affection for that customer exclusively. But if we go back to the customer owns the customer data and the customer is in control, there's going to be a need for embedded financial applications to work across these ecosystems. And so picture, if you will, you're at Amazon.com or Walmart.com, and you've got balances in Apple Cash, Square Cash, Chime, and others. Why can't I co-authorize and commingle those in a shopping occasion and know what my balances are across ecosystems and then be able to send money to pay for that purchase through these things? I think that's a next wave of I think innovation that's going to come across platforms, and people who can actually tie them together for the customer so that they can continue to take advantage of when, where, and how they want to activate their financial services, but now knowing that they are splintered across multiple ecosystems.
Yeah, I love that.
That's a great point, because this is exactly what we were talking about a couple of days ago, particularly with respect to the who owns, right? So as Jayson mentioned, customer owns customer, yes. But I don't want to name the ecosystems, but if you try to get anything out of the ecosystem on your past activity, it's going to be impossible, right? What you did over the last 2 years within the ecosystem, try to get it out. No, it's not. It's very difficult, right? And it is possible, but it's very difficult. So how is it going to span across the ecosystem? It's going to be very interesting to see. And I believe something should happen, but let's see how it's going to turn over the next couple of years. That's very interesting. Very interesting.
Yeah,
I see it as a
theme here
different
in terms of the embedding of finance, not necessarily into a specific platform, but into a broader ecosystem. And I've always used the analogy that nobody wakes up in the morning and wants to get a mortgage. They may need more room for the kids and want a bigger house. The mortgage is the painful part of it. If somebody embeds the mortgage into the whole real estate ecosystem in a way that it completely disappears, consumers will be a lot happier. We're being urged to
Matthew,
wrap up at this point. Go ahead, Jayson. One more point.
Is the time up?
Go
ahead.
Yeah, I was just going to add, it basically is creating a new marketplace model. If you think of the platforms that are leading out there, they often are trying to own the customer, and then they're going to bring their own house branded financial products to the table, right? But if we believe that the customer owns the customer and the customer should be able to choose, then I think, Daniel, exactly to your point, these platforms should enable multiple financial offerings to be made available to the customer, right? In an embedded environment. And what you'll have is basically multiple price points. Maybe the house brand for the platform is at a better terms in a particular scenario, but maybe, you mentioned, Cash App or Venmo, they have, a balance over there. Maybe you have better terms with that application, right? And so I think the platforms, eventually will need to evolve to that point where multiple financial services solutions can play, inside of these, multiple platforms where the customer can take whatever application they've selected and utilize them across the different ecosystems that they play in.
Or we give the customer a robo-advisor to determine which one of these many solutions to use.
The service there as well.
It remains for me to thank Kannan, Daniel, Jayson for a really interesting panel. It's been great speaking with you. We should also thank our organizers at MFI North America. And with that, we'll close out this panel.